Guys, there is some stuff to be worried about in this market. When you take a look at regional banks and their performance relative to small caps, there's breaking down. We're seeing that across multiple measurement instruments, right? And if you take a look at the daily chart for KRE as well as the weekly chart for KRE, it looks like regional banks could be due for another disaster. Okay, that's just what the charts are telling us, and price action tends to precede the news. Now, meanwhile, we also have a high beta stocks underperforming relative to low volatility stocks since the beginning of the year, right? And we've got tech stocks underperforming relative to the rest of the stock market, since the beginning of the year as well. So is there some concerns in the stock market, right? Now, meanwhile, this shouldn't be too much of a surprise if you take a look at the weak months. February is one of the weakest months for tech stocks. Okay, but meanwhile, you have Bitcoin just absolutely ripping, right? It's up, massively today, around 6%, and it's only about 20% from its all-time highs. So, you have tech stocks rolling over. You have high beta stocks underperforming, low volatility stocks, and meanwhile you have Bitcoin, vastly approaching. So the market is much more dynamic than people think, and everything's not just going in one direction anymore. Now, Bitcoin raging really shouldn't surprise you so much if you know about the halving. We'll speak about that in today's video, but it's really been a stock pickers market, okay? And so what we're going to do is we're going to show you guys that it hasn't really just been the Magnificent Seven. In fact, the Magnificent Seven haven't been so magnificent besides NVIDIA. When you look at XRT, these are retail stocks. This looks like it's ready to break out and like it could be heading much higher. And when you take a look at some individual names, you've got Nike with a very nice setup right here, wondering if we can get a gap fill from that earnings collapse to the downside. And you've also got industrials, okay? Industrials making new all-time highs, just hit our price target here. And we've been in some industrial names, right? STLD, this is Steel Dynamics. So we'll go over, all of these charts, a lot of the things that I'm looking at in the market in today's video. I've been sick for like 2 weeks. I haven't even had a voice, so I haven't been able to record. I was out of town for me and my wife's anniversary. So it's nice to get back to YouTube and start recording some videos again. As always, though, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance and trading content. And I also try to sprinkle in 1 to 2 free trade ideas a week. Now, this is what they'll look like, right? We'll highlight the conditions on the chart and then show you guys the chart itself so you can see what it is that we're looking at. You can take a look at the website because there is a website associated with it, and take a look. Okay, it's completely free, so you guys can go back and read some of the previous newsletters and see how some of the different trade ideas have turned out. Many of them have worked out very well. And if you want access to all of my different analysis and all of my different trade ideas, you guys can join the Discord. Okay, the Investment Intelligence Discord. Here's some profit screenshots from February. All right. You can see people are making some nice plays in there, making some nice money. It's $10 a month right now. And you can join using the link in the description for full access to all the different swing trade ideas and intraday analysis. Now, let's go ahead and start off here with the regional banks versus small cap. So what we're looking at is the ratio chart of PCSF, which is going to be the S&P 500 small cap financials. Okay, and then you have the S&P 600. Now the S&P 600 is the small cap index for the S&P 500 or for the S&P. It's a little bit different than the IWM. Okay, it's 600 stocks versus 2000. And the way that the companies are built in the way that the ETF is made is a little bit different. The index is made. But what you see here is, regional banks are breaking down, right? Small cap financials are breaking down, relative to the other small caps, right? So they're actually underperforming small caps. And you can see this in the KRE divided by the IWM ratio here as well. Okay, we've got, breaking down, right? You see we held support here. We tried to bounce, and then we just completely broke through there. And when you look at the KRE, we're not going to dive too much into Elliott wave and make things too complicated. Just understand that markets tend to move in 3-wave as well as 5-wave structures. Okay. And we've got a 1, 2, 3 down here. And so the big question right now is whether or not we put in a wave 4 top, right? You can see old resistance turn to new support, turn to new support. And we just broke through that old support slash resistance, that key zone, and we rejected it, right? We came right back up to the zone and rejected it, and we're pushing lower. And if we break these lows here at 45, I think it's definitely possible that KRE can come down to 40, 41. And that would be a wave 5 target here. Now, we do have a gap fill right over here. These gaps, they do tend to fill about 90% of the time. And so if we were to come down and hit these wave 5 targets, that would fill our gap over here that we started in late November, early December of 2023. Now, there is one last little bit of hope for the Bulls. Okay, this could turn into some type of a cup and handle. You can see also there is a small gap to fill up here. So if this cup and handle was to fire, most likely that would result in that gap fill happening up to about 52 to 53. So, we won't count the Bulls out. Of course, we've got to make lower lows to continue the downtrend. Right now, we have a trend of high, lower high, and we have, lows, lower lows, lower lows. We have not made a lower low yet. So all we can do is kind of analyze the charts and look and see. We can see that major key zone, again, we just flipped it to resistance once again. So we'll have to break out from there along with that cup and handle firing for us to have any chance of getting a reversal here in the KRE. But when you zoom out even more and you take a look at the weekly time frame, remember, we talked about the markets moving in 5-wave and 3-wave structures. Now, your 5-wave structure is typically going to be your impulsive move and lead the trend. And then a 3-wave structure is going to be a corrective structure. Now, those come in the form of ABCs. And when we zoom out and we take a look here, it looks like we got a wave 1 down, 2 up, okay? And then we got a strong wave 3. Wave 3 is typically your most impulsive wave, and that's where we had the bank failures in the middle of that. And what did we do? Well, we saw a nice little rebound, right? We had an ABC structure up here. And if you notice, we basically came right here for the fair value gap play. Now, we're not going to dive too deep into fair value gaps, but typically, something that people teach a lot is you can look for a price to retrace to about half of the fair value gap. And if we take a look at half of that fair value gap right there, that's exactly where the C wave topped out. Okay, now this ABC is going to be the structure for the wave 4, and the wave 5 of the weekly time frame ultimately could take KRE back down to the 23 to 24s, which would put it, back over here near its pandemic lows. Now that may sound pretty crazy, okay, but there's actually been lots of stocks that have come down and came to their pandemic lows, right? We saw Disney come to pandemic lows. We saw stuff like Stanley Black and Decker come down to pandemic lows. So this is definitely something that I'm watching out for. And, if all of the bears are right and there is going to be this huge commercial real estate blow up and disaster, regional banks are going to be one of the ones that are going to be greatly affected by that and affected by that possibly the most. Okay. So I'm definitely keeping an eye out on this. It's not like I'm short right now. I was thinking about getting some shorts a week or two ago. Those probably would have started paying by now, but it's just something that I'm watching and developing. I don't really trade the regional banks too much. Now, here we've got high beta versus low volatility stocks. Low volatility is pretty self-explanatory. These are stocks that are considered a little bit safer, okay? Not as volatile, so you're not going to see as big run-ups in the bull market, but during the bear markets, they're going to be a little bit less volatile, and you won't maybe see those 60, 70% drawdowns that we saw in 2022 in some of the other higher beta stocks. Now, higher beta stocks just mean, how much more do they perform? How much do they outperform relative to like the S&P 500? So a high beta stock in a bull market is going to perform very well. It's going to go up much higher. And, in a bear market, it's typically going to perform much worse. Okay. And so, being that things have been so bullish, being that we started a new bull market in 2023, you would think that we would be seeing high beta stocks outperforming low volatility stocks. But just like the KRE and the regional banks relative to the small caps, when you take a look, we're actually seeing this breakdown. Now, it's coming down to some key areas, but the big question here is, was this a big oopsie, right? And, was this a big little oops? We got a little too ahead of ourselves. And could this potentially be turning into a double top on our high beta, low volatility ratio chart, right? If we break the neckline right through here, we would see this come down, okay? And typically that's not going to be bullish for the stock market. That's, something that you would see in a much more bearish environment, in a market correction environment, in a bear market. And when you take a look at tech versus the stock market, so we're looking at this via the XLK and SPY ratio chart, what do we see here? Well, was this a big oopsie, right? And we had this big burst. And ever since then, even with NVIDIA's, big earnings, we see that these are still heading down, right? This is still in a correction right here. So we'll be watching this ratio chart here. You take a look at a stock like Google, and Google was down a bunch today, down massively. And we're seeing these big tech names. If this breaks, right, and we see this because of the large weight that tech has in the S&P 500, this could result in a strong market correction and seeing the market pull back. And we typically see some type of correction in the stock market seasonally, towards the later half of February and in March. So, this is another thing that I'm watching and monitoring right now. And, everyone's so focused on the Magnificent Seven. Everyone is saying that it's only big tech that's been rallying. If that's the case and that's true, then this is something that you really want to watch out for. But that's not really the case, okay? There's lots of other stocks in the market that are performing very, very well. We're going to take a look at those. But like I said, meanwhile, we have Bitcoin completely raging right now. So, tech is underperforming the S&P 500. As we mentioned, for the NASDAQ 100, February is not a great month typically. It's a weak month, okay? It is in one of the worst months category, with February and September for tech typically being the worst months. So it's no big surprise that we're seeing tech underperforming the S&P 500 right now, in my opinion. But, meanwhile, we have Bitcoin approaching all-time highs. A lot of people think that Bitcoin and NASDAQ are going to mirror each other, but that's just not the environment that we're in here currently, okay? Bitcoin has a lot of momentum, okay? Not only did it have the ETF approval, really pushing it up, and a lot of people were trying to get in before that ETF approval, but we've also got the Bitcoin halving coming up. And if you take a look at the halving effect on price, you can see each time that we've had a halving, there's been a significant increase in the price of Bitcoin afterwards. And each time we've made a new all-time high in Bitcoin. So, Bitcoin is only about 20% right now from its all-time highs. And if this pattern of the halving effect on Bitcoin is going to repeat itself, then it really shouldn't surprise us that we're going to see potentially all-time highs again in Bitcoin. Okay. Bitcoin is a very risk-on asset, and you would think that if Bitcoin is going up, that the market is very risk-on and that we're going to be, raging. But the market has been continuing to go higher, right? The SPY is still making new all-time highs, but it's in, some other sectors that you may not think of that are really carrying a lot of the weight, even when tech is underperforming. And so one of the ones that I want to bring to you guys' attention is XRT. This is the retail ETF, okay? And a lot of retail stocks have really been performing very well. I forgot to include this chart in the slide deck, but NVIDIA has actually been outperformed by Abercrombie and Fitch. Okay, so if you go to the bear market lows, in October of 2022, Abercrombie and Fitch is up over 750%. Now, NVIDIA is up hundreds and hundreds. I think it's up over 400% since then. But Abercrombie and Fitch has quietly and secretly outperformed NVIDIA, the stock with the biggest and most headlines that we've seen really for the past year. And a lot of people don't even know about that. Abercrombie and Fitch is a retail stock. Look at this weekly chart for the retail ETF. We have a huge basing pattern right here, a huge base. Okay. And now we're trying to break out past this 74 level. I think above 74, XRT looks really good, and we could eventually see this head up to 85. Now, this is a weekly time frame. That's not going to happen next week or in the next 2 weeks. It's going to take time to develop. But when you add on top of that, we've got a nice J hook pattern right here. These J hooks are very nice continuation patterns. So I do like the XRT ETF. If we can, hold above 74, I think you have a stop below at 73, 72, maybe 70, depending on what your own risk tolerance is. And you see, hey, can retail stocks continue to perform in this market environment? One of the individual names that, we had a setup on is, once we broke this initial trend line in the Discord, as one of the analysis and trade ideas I mentioned, I said, hey, we broke this trend line here. Right, big overreaction to earnings, huge move down, we've got this key demand zone. If we can come down into this demand zone, this is going to set up an inverse head and shoulders. And right now, we're there in this right shoulder territory. So it's just a matter of follow through, right? Can retail as a sector continue to perform well and outperform, and we see this ETF go up? Well, then it's a possibility that we may see Nike hit this inverse head and shoulders and potentially get this gap fill on Nike back up to 110, 115, maybe even 120. Definitely something that I'm watching here at the moment. We've also got industrials. Okay, industrials have been a market leader. Okay, it's been tech, it's been industrials, and it's actually been large cap financials. Really have been very strong powerhouses in the market so far lately. And what do you see here? Right, we broke out, we came down, retested a key zone right here, and ever since we broke out, it's been absolutely off to the races, hitting our bullish price target up here at 120.5. Okay. And now we're starting to see a little bit of consolidation. So, I wouldn't try to chase these right here. All right. Especially after hitting a price target in such a rapid move from 110, all the way up to 120 in a very short period of time. This is from January. Okay, from January we've seen a big move in the industrials, and there's been a lot of big industrial names making moves, and STLD is one of them. Right, last week in the Discord we posted the setup on STLD. We said, hey, we've got a little bit of a cup and handle forming here. You can see the initial entry area offering about a 2.5 risk to reward ratio. And now these calls are already well in the money. They're up significantly. I've taken profit on these and got just a couple runners left. So really, the rest of the trade is almost risk-free, right? And, now I can just let this ride, see what happens. Maybe we come down and retest this area, right, for a clean breakout, retest, and then push higher. And maybe I can look to potentially get back in with the stop below, adjust my stop parameters here, or just let this thing ride and see if we can continue to come up and hit the bullish price targets on Steel Dynamics. Okay, so hopefully you guys enjoyed today's video. If you did, smash that like button, subscribe to the channel. Don't forget to join the Discord. Okay, these are some screenshots from some of the different profits of the different plays, members in the Discord. You can sign up for the newsletter. Okay, that's completely free. Links are in the description for both of those. And if you ever want to do a coaching session, I do one-on-one coaching all the time. You can check out my Ko-Fi page, click on this commissions tab here, and there you can book a 30-minute or 1-hour session. It is 20% off for all of the Discord members. We've had a lot of new people join, been doing some coaching sessions with some of the new members. We can go over a lot of things, right? We can go over, day trading dynamics, some of the strategies that I use for day trading, swing trading strategies, interactive Q&A. If you guys got some burning questions and you just, want to know some things or figure some things out, if you want to do intermarket analysis, how to use ratio charts, different indicators, all types of things, feel free to hit up my Ko-Fi page. There's also this little buy a coffee button, and this is basically a way to leave a tip or donation for all the free valuable content that I do put out for you guys. Thanks again for watching, and I'll see you in the next one.